Did you know that there is a stock bigger than Tesla which will most likely go 100x? If this seems like news to you, make sure to stay tuned and keep watching what stock is being referred to. With all the available resources available to mankind, people have been clamoring to invest their hard-earned money in stocks that have the highest chance to perform well. Tesla, one of the most known stocks in the market, has also been performing well enough through the years. However, there seems to be a stock that might just be bigger than Tesla. In fact, it may well go over 100x. In today's video, you will find out what stock will go 100x, which also appears to be bigger than Tesla. As most of you may already know, Tesla is a leading automotive and clean energy company, which is why it may appear as a surprise for some to find out that a different stock might surpass Tesla. In an interview with Cathy Wood, she shared everything she knows about the said stock. Cathy Wood, for those who have no idea who she is an American investor, a star stock profiler, and the founder, CEO, and CIO of ARK Invest. ARK Invest is a well-established investment management firm with $60 billion in assets that invests in innovations like self-driving cars and genomics. According to Wood, autonomous vehicles are robots. She said that in this regard, referring to robotics and how it is generally and historically perceived, Teradyne is the #1 pick. Teradyne Inc. is an American automatic test equipment (ATE) designer and manufacturer that engages in the development and sale of automatic test systems. Teradyne brings high-quality innovations such as smart devices, life-saving medical equipment, and data storage systems to the market faster. A lot of people remain unaware of the fact that Teradyne is involved in robotics, especially since they acquired Universal Robots in 2015. Universal Robots is a Danish manufacturer of smaller, flexible industrial collaborative robot arms, or cobalts, based in Odense, Denmark. The acquisition of Universal Robots is still a small part of Teradyne's overall revenue, but since costs of industrial robots, particularly collaborative robots or cobalts, are dropping, it is expected for said robots to cost $10,000 to $11,000 each in a few years. In the same interview, Cathy also mentioned the huge role 3D printing plays in today's day and age. She mentioned Stratasys, Protolabs, and Materialise. Stratasys provides complete polymer 3D printing solutions for every stage of the product lifecycle, across design, manufacturing, and healthcare. Protolabs is the world's fastest digital manufacturing source for custom prototypes and low-volume production parts which use industrial 3D printing, CNC machining, and injection molding technologies to produce parts within days. Materialise incorporates more than 30 years of 3D printing experience into a range of software solutions and 3D printing services. Wood mentioned that 3D printing has been held back by autos before and now by aerospace, but she further stated that crisis creates opportunity, which produces the chance to accelerate the demand for 3D printing. When asked about the present status of 3D printing and whether it is actually going to break through now, she answered, "Yes, it is. If you ask where it is in the valley of despair. Many stocks are down 80 to 90% from their highs because their focus was on the consumer space and not on the industrial space." Wood proceeded to say that aerospace companies like Boeing and Airbus's gross margins are in the 15 to 20% range. According to her, 3D printing can cut those costs by up to 90% since the FAA, or Federal Aviation Administration, is approving 3D printing. Additionally, it can lower the weight and form factors of the various parts in engines as well as shrink the number of parts. Wood concluded that because of the turmoil and trouble the aerospace industry is facing now, they will probably seek out more aggressively some of the new technologies which will help them get back to profitability. Wood was then asked if she believes that this venture and collaboration with the 3D space is feasible, to which she answered, "Definitely, it is absolutely feasible." She added that there was a showstopper for a while when the FAA was very concerned and felt the need to scrutinize every part and every material. However, when it started seeing evidence of success and proof of concept, it became more accepting of 3D printing. The FAA also started seeing the stress that aerospace companies are experiencing, so it's quite possible to see more approvals of different materials and the possibility of more companies starting providing services to the aerospace community. Do you believe that this stock is indeed bigger than Tesla? Let us know what you think by leaving a comment below. As was mentioned respectively, to clarify, 3D printing or additive manufacturing is the construction of a three-dimensional object from a CAD model or a digital 3D model. It can be done in a variety of processes in which material is deposited, joined, or solidified under computer control, with the material being added together, typically layer by layer. The 3D printing technology did not only improve the automotive and aerospace industry, but also changed other industries as well. The medical industry, for one, has been greatly changed for the better with 3D printing. In fact, almost 95% of hearing aids in the world are 3D printed. There are even talks that hips and knees in medical applications are set to submit to 3D printing as it allows incredible customization. Cathy Wood was also questioned on plans of adding short positions to one or more versions of her funds. Wood answered with this: "Well, we have. We have internally for employees only. We are testing out a portfolio, but it is really ARC on steroids, if you can believe that. We want to test it out on ourselves first and make sure that everybody keeps their eye on that 5-year investment time horizon." She added that their time horizon does not pay attention to the day-to-day, since what they are focusing on is shorting stocks that are in the big benchmarks. When they get into a risk-off situation, portfolio managers and analysts generally run back to the said stocks, get closer to their benchmarks, and dump the stocks which are either small parts of benchmarks or not in the benchmarks at all. This is a great opportunity for Wood, though, as they have recently experienced picking up stocks because it is simply a risk-off move to get closer to benchmarks. We think the benchmarks are where the big risks are long-term because they are filling up with the value traps. Those companies that have done very well historically but are going to be disintermediated and disrupted by the massive amount of innovation that is taking place, Wood added. What is a benchmark? A benchmark is a standard against which the performance of a security, mutual fund, or investment manager can be measured. Generally, broad market and market segment stock and bond indexes are used for this purpose. A good benchmark will have a transparent set of public rules and therefore predictability for investment managers. In essence, a good benchmark is representative of a strategy's investment universe and is therefore representative of its risk and return characteristics. This means some good traits for benchmarks may include clearly defined underlying securities and their weights. She believes that truly disruptive innovation is priced at roughly between $10 to $15 trillion in the public global marketplace. In 10 years, those numbers can even raise to $200 trillion, so it will go from a little more than 10% of global equity market caps to what is believed to reach more than half. That is how much disruption is evolving according to Wood. This is said to be due to DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. All of these are converging so that S-curves will be feeding S-curves. The S-curve refers to a chart that is used to describe, visualize, and predict the performance of a project or business over time. More specifically, it is a logistic curve that plots the progress of a variable by relating it to another variable over time. Cathy concluded the interview with, "This 5-year investment time horizon is critical. The next 5 to 10 years we think are going to be spectacular. Will there be volatility? As you say, ARC already is a volatile strategy, and that is why we say keep your eye on the prize. In 5 years, the world will look nothing like it looks today, and we're invested in all of the disruptors, the winners that are going to disrupt the traditional world order." If you want to see more of this content, make sure to visit our channel, watch our other videos, and hit the like button if you enjoyed watching.